Good morning. First of all, Happy New Year. I wish you all a unbelievable, successful, and mostly also stable and healthy 2026. We will start in 1 or 2 minutes. We will wait a bit more for some others to join. The purpose of today is, of course, the approval, which will take offline place for the financing of the processing plant. We will start in 2 minutes. So again, good morning. This meeting is being recorded. Again, for the people who joined a bit later, a Happy New Year. I wish you all a really successful New Year, and hopefully we have together a successful 2026. Today we are here discussing or presenting the approval for the financing of the processing plant. It's part of the strategy to 2030. So we are stepping into the execution phase of one of our projects. This year, more projects will follow. Think of the vertical farm, as well as the financing for the Q2 farm, which we expect also to announce in the coming weeks. And there we will have again an online call for. The voting takes part offline after this call. So let's go to the first slide. So why the AGRAR has decided to invest in a processing plant. Processing plant in this case means that we will be able to produce skimmed milk, cream, kosher milk, etc., even milk with an exact percentage of fat. So we can further diversify our clientele, as well as since last year we started to increase our exports, mainly to Greece and Northern Italy. Because there is a stable and sufficient milk price as well, mainly even one of the higher ones in Europe, I would say. Of course, one disadvantage is when you export, you have more transportation costs. So with this new plant, we will be able to reduce our transportation cost. That means we take water out of the milk, partially. And through that, we can, of course, transport way more milk to Greece and Italy, but also to other type of clients than where we are working with today. So today we are working mainly with processors. Through this implementation, we can also sell products to bakeries, bakery factories. Even you could think of ice cream factories, food companies like Unilever, Nestle, etc. While we are not competing with our main clients, because that's really important for us to not compete with our existing clients. So we looked through different ways. How can we grow our core foundation, our core business, where we're good at milk production? How can we grow that in sustainable, but also in a strategic way? And then we had two options: either to somehow diversify and geographically open new markets. Or another option, of course, could be as well to also deliver to more smaller factories in Romania, but we have a lot of experience there. And there are many times cash issues there, let's say, as well. So we prefer to work with large multinational clients, as we are also a mass producer. And that's also the key differentiator of the AGRAR. Because why is the AGRAR able to sell its milk for a Northwestern European price and not for the local price? Of course, to deliver year-round, constant quality, but also constant volumes. So yeah, this is, and of course, this is with the processing plant the same case. The investment is 3.5 million euros. The production per day is 150,000 liters, so that will be the full capacity of the Straža farm in the future. At the moment, we are not there yet, but we have over 2,000 animals there. And of course, we are still growing this year and next year as well. There are the animals to reach, the goal is by the end of 2027 to reach this production capacity. In the meantime, of course, we could also bring from other farms milk to this processing plant. As well as we will have 300,000 liters extra of storage capacity with this plant. And why is that? Especially during Christmas, but also during other kind of public holidays or in the weekends, it's harder to sell milk, especially when you need to sell it on the spot market. Usually the prices are lower during these days. So with extra storage capacity, the not contracted milk, we will be able to store it for a few days. And through that, we can obtain a better price. So that's another benefit of this new plant. The technology is already. We have the contract signed with the technology provider. It's from Belgium and the Netherlands. As you can see here, the construction of the factory will take place in May, July. It will be the location is the Strasia farm, so it will come directly in front of this farm, and it will be fully connected. Then we have in August testing and optimization, and we aim to start from September to sell the products, cream, as I said, specific milk with a specific level of fat. So kosher milk, so there are different skimmed milk, as I said, so there are different options to sell, as well as different types of clients. The financing is by Exim Bank at 1.5% interest plus 6 months Euribor. When we negotiated this deal with this financing with Exim Bank, we also negotiated the other financing from Exim Bank, the interest rate to go back from 2% to 1.5%. So, especially in the current market, I would say it shows the strength of the company that we are able to negotiate such competitive interest rates. As I said already, 150,000 liters per day, storage 300,000 liters capacity, additional to the other storage that we have. So with this, we can optimize our sales chain. The production I mentioned already. Think of Unilever, Nestle, bakeries, but we are also able, and large processors are not able to do that, to deliver 1,000 liters packaging to smaller factories in the country as well. As I said, possibility to increase dry matter content from 9% to 36%. That means an efficiency from 4 trucks to 1 truck. So as I mentioned already, this is a huge efficiency improvement, significant transportation cost deduction, and it will open new markets. So we can, through this investment, we believe we can still grow in milk production, although we are significantly diversifying, of course, in the coming years. Here we see the plant. So you see the storage capacity is more or less outside of the building, and inside we see the processing plant. It's fully automated, fully technology based, and this is a test plant. Of course, we are really confident that this will sustain and opening new markets. But by the end of the day, it is still a commodity. So it is not necessarily that we think we will generate a lot of additional revenue above a normal producing of milk. It only supports us to further grow our milk production in a safe and sustainable way with a larger portfolio of clients and also a more diverse client base. So then we are already at the end of this financing presentation. So as I said, this is part of our 2030 strategy. We have a lot of plans, especially to execute this year. That is this plan. It will be the first plan that we execute this year. The second, of course, is still further development of the Strasia farm, as well the vertical farm for production of wheatgrass. We are also quite far with the financing there, as well as the financing for the Kutu farm. For the Kutu farm, it's approved already by the bank. There are some legal articles where we are still sending back and forward, but I expect in let's say 2 weeks or something to finalize this and to announce also that financing project. The Kutu farm will also have 5,000 animals and is 150,000 liters per day. And there we take also in consideration this processing plant to also build there such a plant. And the Kutu farm will be built next to the biomethane plant. That being said, there are some other things I would like to remark as well. That's regarding IFRS. The 9-month result from IFRS, they will be published normally the last week of January. As well, we have, of course, the preliminary results at the end of February, as well as in the beginning of March. We will also publish the year 2025 IFRS results. This all in preparation to the upgrade to the main market. We had also some questions regarding if we would issue new shares. Currently, there aren't any plans in this regard. Of course, we have stated many times that our strategic goals are to further diversify our investor base. This is mainly to attract institutional investors. So we are working on that to further diversify the investor base on the institutional side. And that is, the only thing what I really have to say on this matter. Then we had another question, and I will answer this generally because it is not a teleconference regarding the financial result. We had a question, how much the three largest clients occupy, which part they occupy in the turnover. But anyway, I find it a bit of a hard indicator, let's say, to follow, in the sense of we had last year as a really high milk price, the highest average that we ever had. So of course that really varies per year. But what we could say is last year with this high milk price, and of course only starting with the compost, that for the 9 months this had like around 90%. If we look to the largest client, Lactalis, we see a constant decrease through the last couple of years. Now they occupy, as we mentioned also before, around 75%. As well as we look to the liters, that is constantly decreasing. Up to a few years ago, that was over 90%. It's now under 80%, and it will further decrease. Is that because we deliver less milk to Lactalis? No. This is mainly due to the fact that, of course, we increased the production and we attracted new clients. And this will, in the future, follow. Especially also in the last quarter, we will see an increase or a decrease again on the main clients, because we exported more also in the last quarter, because we produced all the milk that we produced more than the previous quarter was not contracted and is sold mainly outside of Romania. That were the two questions. Let's see if there are any others in the chat. So we have here a question: how do you see the milk price evolution for the coming months? December milk production saw a big increase compared to the past months. Can we expect similar production levels for Q1? Yes, we expect similar production level for Q1. Of course, there is quite some headwind on the milk price. That is clear. We have quite a significant decrease. We will have on the milk price in Q1, but that's really a temporary thing. What we see, what analysts are writing currently, is that they expect up to 2030 that there will be approximately 20% less milk produced in Europe. As well as if we look to the evolution of the milk price, what analysts are writing currently, and then I'm talking about on the European level, not on local level. There they estimate that between 2026 and 2030, let's say, more or less in the coming years, they estimate that the average milk price, and I talk about the base price, so without a bonus for fat and protein, is somewhere between 48 and 52 euro cents the liter. Of course, currently the prices are lower. Has several reasons. It has to do with the weak dollar. We saw, for example, Parmigiano significantly decreased the export from Italy, as well as butter from Ireland. Those exports significantly increased to the weak dollar. Another thing, of course, what could enter this year are the tariffs from China. Although there is some good news there to mention. In this regard, the European Commission is discussing with China regarding the tariffs on cars. And it seems like they will soon have a deal. So probably those announced tariffs, who are not in place yet from China on dairy products, will not be implemented. So that is some good news. But it's clear there's a lot of unrest in the world. So we will see what it does the rest of the year. We think, based on our analysis, that of course will also have a decrease in February as well as in March. And then we expect that there comes some stabilization, but that the price will show an increase again. We still think that will take a few months. As well, another consequence or another reason that there is more milk than expected, because also the processors were somehow surprised, is that there was blue tongue and the mouth and claw disease last year. At that time, a lot of cows didn't become pregnant or didn't give birth to calves. So also the cycle shifted a little bit this year. But on the long term, it's clear what the analysts write. They estimate 20% less milk in Europe and an average price between 48 and 52 euro cents on a European level. That is what they're currently writing. How do you see the impact? The Mercosur treaty, we don't expect much impact on our business model. What we would see is, of course, the import of soy beans. That would also probably has a consequence for the price of rapeseed, which we import mainly from Hungary. So that will benefit us. The only negative point you could argue is, of course, regarding meat. But although dairy cows are not really that popular for meat, but of course the value of those animals could decrease, and especially also in the fair value method that we will use for IFRS, of course, that could have an impact, because it will be restated every 3 months. But in general, we are really positive for this, and we also support this deal. I think it's not only for our company, but also if we look to the geopolitical level, in the context where we are in Europe with smaller nations, it's really important to have a rule-based order and to follow certain rules. We expect some other deals as well. From what I understand, they are also quite far for a trade deal with Australia and probably Japan later on. But as I said, in general, in our industry, more or less, it should benefit because feed costs could decrease. Let's say that is the main impact on the dairy industry. Have I understood correctly that you do not look at the investment to have a significant? Yes. So have I understood correctly that you do not expect that this investment to have a significant impact on the revenues? It has an impact on the revenues, but it's still a commodity. So the price of cream, the price of skimmed milk, etc., it still follows the trend of milk, of normal milk. Of course, it has an additional fee. So of course, it will bring in revenue, like the farms bring in, who produce just milk and who sell it to a processor, bring in a revenue. I don't necessarily expect that, let's say in a different way, that the profit margin of the product is necessarily higher than the milk that is just sold, for example, to Lactalis or other companies when we sell this kind of a product. It could be a little bit higher, let's say. It could be a bit more margin, but what it mainly helps us is that we can further grow in producing a milk where we're good at. So of course that will bring in revenue. We can further scale the company, but it gives us also the option to diversify our clientele. So now we work mainly with large multinationals, but I can give you an example. We have now also one client, and I will not name it. It's a local client where we work with, and as soon as now the price drops, while we have a fixed price, let's say, in the contract, they start to complain, they start to find excuses, etc. It's really hard to work with those smaller factories. So you can have a kind of two philosophies. I mean, we are a mass producer. We produce large quantities with a constant year round. So we try to produce in a flat rate with a constant quality. And if we would further diversify our clientele just to have a lot of smaller factories as well, just for the sake of to have more clients, that would mean lower revenues, because it would mean a lower milk price. So we looked in a strategic way where we thought, okay, we export quite some liters of milk in August, etc., but also later in the year to Greece, where we received the highest milk price that we received this year, also higher than from our clients. So we said, how could we further grow with our core business model without being then dependent on 1, 2, or 3 large clients? So this is the main reason we do this investment. So that's more what I tried to say. So of course it has a clear impact, because it has all the milk from Straatje, let's say, will be sold through that plant. But it's more a strategic move from that perspective. Yes, the biogas legislation has progressed a lot. Things are looking really good, and we estimate, or from sources, that it will be implemented around June, July, let's say. So that would be really, really good. Normally, I think, I hope the final investment decision will be taken on forehand already, but okay, that depends also on Black Sea Oil and Gas. But we are really far. We are in the middle of permitting, etc. We're selecting the testing technology, so things are really advancing from both sides. So this project looks really good, and we are confident that this will be implemented in the coming years. In this moment, in which scenarios do you estimate then we will later in March announce our budget, and you would ask, okay, why you don't do this with the preliminary results? That's mainly because it's a bit hard to predict what the milk price will do on the short term, as this was quite unexpected. We expected a correction and we expected a decrease, but not of this size. So then we will come back to it. But of course, with the current size, with the current price, if you would just take that price, of course, you come around, let's say, a scenario close to scenario 1. But we don't expect that this price, as I said, remains for the whole year. So we will come again with an ambitious budget. Also, we have, of course, 2 compost plants this year. The second one is started just in the testing phase in AGRAR. The other one is full running. We have acquired also a packaging machine. We are now able to package the compost in 5, 10, 20, and 50 liter bags, as well as in big bags. The certification goes smoothly, not smoothly, but is progressing as well. As we started a procedure to have also the European certification. So also there we estimate extra revenue from. But we will come with a clear answer which scenario we estimate specifically for this year. But the scenarios are more meant to show the trend in the coming years, what we estimate. But okay, we'll do that when we present the budget, and if we can find some more information, let's say, on the market before that, of course we will share it with you, maybe through the preliminary call. So I think all the questions are answered. So yes, as I said, we are quite positive. We have quite a positive start of the year. It's really a year of execution. We're going to implement a lot of projects. As well, processing, that's something new, but we have the context already that we are confident that we are also able to sell this to certain factories. Secondly, of course, the wheatgrass plant, we are in the design phase there. That's almost finalized. I expect to be finalized by the end of January. So also in the coming weeks, we will probably announce the approval for financing, and for the Koet 2 farm, as I mentioned already, which will start construction in the second part of the year. There we have also more or less already finalized the acquisition of the land. So on the long term, things look good for the dairy industry. Dairy consumption is growing. Cheese consumption is growing worldwide, and more farmers are stopping, let's say, or are quitting. So there will be less and less milk on the market. The reason now there are already a lot of farmers, they quit it in the last couple of years. But we saw so far the industry succeeded to produce more milk with a significant lower amount of animals. But of course, this is not you can't continue forever like this. So we will see in the coming year a decrease of milk production in EU level, which should support a stable price around 48 to 52 cents per liter as a base price. So we will go now to the offline part of this meeting. Thank you very much. I hope to see you at the preliminary results call, or in the coming weeks when we have another approval. And otherwise, I wish you a great day and already a great weekend. Thank you.